Emergency broadcast. I am bullish on the market. I am buying the dips. You cannot be bearish down here. You have to buy the dips. In today's video, I'm going to explain exactly why. We're going to talk about the SP 500, the large tech stocks, the IWM, the dollar, the yields. I'm going to try to make this as quick as possible. All right. So without further ado, let's get started. All right. Let's start off with the chart of the SPX. So we can see that from back in July, we made a trend line that was basically a falling wedge. All right. So this was the bottom portion of a falling wedge. All right. And every time we came off of this level, we bounced. So this bounce occurred twice. Right. So now you can see that this trend line, I have not touched it. This is the same trend line. And it looks like we are bouncing off of this level of support here. So that's one bullishish region. Okay. Number two, this is a chart of the SPY on the daily. And we are at a trend line level of support starting back from November of 2022. This is an uptrend that's been tested back here. And now we are back at this level of support. You can see that it is trading right above that level currently. And that level of support for tomorrow is going to be approximately 414.70. So you can see that it's right at this level of support as well. Guys, the third reason is we bounced off this very, very important level of support here at 411.76. So now going back in time, you can see multiple times this has acted as a very key level. All throughout here it was acting as resistance, then it became support. Same concept, resistance. This was a very, very key level dating back. This even the February 2022 lows where we also went long over here and had like 100% play on very safe contracts during the day. Like basically just got very, very aggressive towards the long side on this day. That was, we bounced right to that level. And it goes back to April of 2021 where it was the initial breakout point. So there's two main levels. This 411 level and then the 396 level. This was a very, very important breakout level. But the second most important in recent times is this 411 level. And once we broke over this, I could just erase this. Once we broke here, right? Once this became the bottom, the market just continued to rise. So this is a major level of support, guys. And we wicked at it today. So this is three very important reasons so far. And as I saw the market just dropping closer to 412, I basically just posted this on Twitter as well. I started getting into November SPY and QQQ calls. And I'm, going light. I expect another move to the downside. But down here, it is almost impossible and very, very unwise to be bearish at all. Fourth reason, this is a chart of the NASDAQ on the daily. We were trading so far outside of the lower level of the Bollinger Bands that we needed to have a pullback. And this is very important to look at because the NASDAQ is the leader of the market. If the NASDAQ is showing the most weakness, there can be a very good chance that we can get a bit of a bounce led by the NASDAQ, right? So it's a good sign to see the NASDAQ being the biggest loser and very overextended to the downside because it gives the biggest chance of a bit of a bounce. And that's the fourth reason why I'm bullish. The fifth reason is all of these large mega cap tech stocks that are very, very overextended to the downside. So number one, Meta was very, very far overextended to the downside. Obviously, it had to do with the weakness in earnings and everything, but this had a very big move to the downside. So Meta, Google, of course, how far overextended these stocks are to the downside. A bounce is warranted, right? Just from a Bollinger Band perspective. So Google, Meta, Apple, AMD, and Nvidia. Like these stocks are very, very overextended to the downside, guys. And it's a good deal because when the tech stocks are like this, especially Apple, Tesla, we also have Amazon earnings today, and Amazon is overextended to the downside. So if earnings come out poor, that could bring the market down a little bit as well. But it's impossible. You cannot be bearish on the market when we are this overextended to the downside. Time and time again, guys. Every single time this happens. Every single time this happens, guys. I never ever say to start being bearish. These times in the market is when you start buying dips and holding enough money as extra ammunition if the market falls lower. So you have to start going long when the market is this weak. And then if it falls even lower, you have to allocate more, to be honest. And now is not the time to become aggressively bearish. The market already made a big move to the downside. The SPY is already hit 411. Okay? Now, we've already went through 5 different reasons. What I will say before we continue is basically the SPY, think of the market. So you know the same concept of a blow-off top. A blow-off top occurs when people think, a top has occurred in the market, and then we rip again, really, really catching a lot of people by surprise. And then once it's caught enough people by surprise, where the people that were bearish here became bullish over here, that's where the blow-off top occurs, and then that's a good reversal point. So now this same analogy, the blow-off bottom, in my opinion, on the SPY would be somewhere around 406 to 407. That's still possible. I'm not saying that is out of the realm of possibility. You have to understand that this is where essentially the blow-off bottom on the SPY would occur, in my opinion. So that's why, it's just unfortunate because you have to go long here. You cannot. We got into 413 and 354 or 353 calls, or 344, 343 calls on the NASDAQ. So you have to go long. It's not a time to start going short, but at the same time, you have to have extra money. Allocate your position and your portfolio accordingly based off of another drop that should be coming. So, yeah. So let me just make this very clear. We can easily come back and retest everything and fill this entire wick. So that is not out of the realm of possibility either. We can continue to fall. But once again, you cannot be bearish down here based off of the other reasons that I showed yesterday with the stock charts. So I showed you guys the buying power of the SPX. When it's below 30, that always leads to a bounce. So we're currently below 30 on the SPX. So on the buying power of the SPX. So this always leads to a bounce. So just keep that in mind. It might not occur until next week, because next week we have the Fed rate, we have the FOMC statement and everything that's going on. So we can still see some turbulence for the next month, or for the end of the month, into November 1st. So this can be another, basically there could be some more choppiness. We could drop back down to 411, 410 in the next few days. But regardless, my bias down here is you have to be bullish. There's maybe another 10 points to the downside that you can get. But if you caught the longs down at 412, if we fall down to 405, that's a $7 risk, as opposed to, if we retest 430 from 412, right? The risk reward is you would be risking $7 in exchange to get 28. So then that's a really, really good point to get long, right? So even if it doesn't hit 430, 427 was a very major level. 425 is also a very major level. The risk reward is still in the favor of people buying the dip. So, and then as we get closer to 405 or 406, right? Then that 400 level on the SPY is going to be very, very important. So I hope this makes sense. Just please look at the chart and everything with an open mind, and just understand what happens to people when the market falls this much. So when the market falls this much, obviously it's bearish. Obviously it looks the worst. The market always looks the worst before it bounces. Okay? When we get this weak, it's obviously inclined in our gut to start feeling, oh my God, the market is about Sorry, I had to sneeze. But as we fall this low, obviously people are expecting the market to continue to fall. But you have to look at it with an open mind. You have to look at it from a bird's eye view and realize, okay, market already dropped huge and dramatically already. Now is not the time to start piling in and start shorting the whole. Never get caught shorting the whole, guys. Whether this takes another week, 2 weeks, regardless of what it is, down here is not the time to be bearish at all. So that's why it's important to grab some calls, in my opinion, with some time, to give yourself some time. And it's so just dangerous to be bearish down here because the risk reward is not there. And, you know, it is what it is. But regardless, this could also not work, right? I could be wrong, but I generally am not. So, yeah, you know, this is one of those other times where you have to be long. Unfortunately, you have to go long at support. And yeah, that's about it. So I hope you guys enjoyed today's video. I hope it gets uploaded fast enough. All right, take care. Have a good one. Make sure to subscribe to the channel. Do all that good stuff. And I will see you guys tomorrow. Thank you.